The Fox City SCORE chapter and WHBY are pleased to bring you Biz Talk, a chance for you to hear from entrepreneurs and professionals as they share their experiences from starting to sustaining growth. Learn the skills needed for your business to be successful. If you missed anything, you can catch the Biz Talk podcast at biztalkwithscore.com. And now from the Myron Construction Studio, it's Biz Talk on WHBY.
Good morning and welcome to the first show of Biz Talk for 2024. Joining us this week is our longtime sponsor, but as our co-host, we've got Rick Sense here this week. How are you doing, Rick?
I'm doing well, Terry. Happy New Year to you.
Same to you.
Thank you.
We'll introduce Kurt. Most of you have heard him before. He's sponsored the show for quite a few years and has a business in the Valley as an accounting firm called Heling Associates. Kurt, welcome to the show.
How you doing? Good. Happy New Year. Happy New Year, guys. How are you doing?
Excellent.
Doing well. Thanks, Kurt.
It was a very different holiday with weather almost like October, but it was nice. I don't miss snow at Christmas. I'm not a person who has to have it, but anyhow. So Kurt, we're going to start first and talk a little bit about you and your background and your company. So let's start from why did you get into accounting? What made you choose this profession and how did you get started in it?
That's a good question. I just had a chance to do some volunteering over at Fox Valley Lutheran a couple of months ago and that came up. Originally, I got involved with it. I took an accounting class in high school and found it to be super easy from the standpoint of it just kind of fell into place for me. The teacher would be up at the board, going through problems, answering questions and everything like that. And I'd be working ahead, have the whole assignment done. She'd get done talking and I'd say, okay, now what do you want me to do? And I'd sit there for the next half hour. So they kind of took me aside and said, this might be something you want to look into. And they put me on kind of a self-study program so I didn't go off the rails too much. And then they allowed me for that same hour then to go play guitar over with the swing choir for that hour because I was on self-study anyway and I just needed to kind of check in, turn my work in, make sure that I was doing what I was supposed to be doing. So I basically got, the whole week's worth of work done in about 2 hours. Then I got to college and found out it wasn't quite that easy when you got to that level, but it still came pretty naturally to me as far as that goes.
Okay. And when you did get into college, did you go into accounting or the business generally with and then move into accounting? I
started with an accounting focus at UWGB, and there was a professor there, Carl Zems was the head of the accounting program over there. Ann Selk was one of the professors over there. Those are a couple that come to mind quickly. Dan Spielman was the business law professor over there. He was also the athletic director. That was back in the Dick Bennett days at UWGB. If you remember those fun basketball years. But went through there and pretty much stuck with the accounting program all the way through. And then had to decide what area of accounting, whether it was going to be corporate accounting, public accounting, governmental accounting, things like that. What area is going to get into, auditing, anything like that. That was pretty wide open at that point. But after I got out of college, I started with a firm in Shawano. I grew up between Bondwell and Shawano, went to Bondwell High School. So I started with a firm in Shawano a few weeks after I graduated college and started there, worked there for 3 years, got my 3 years worth of experience to go along with passing the CPA exam, then moved on to a firm in Appleton, worked there for 5 years, and as things were going through transitions there with different ownership and everything like that, left and got my own firm started. And that was I turned in my notice July 3rd of 1996. That's one of those red letter days that people remember, just kind of like people that anytime somebody starts their own business, they have those red letter dates like that. July 3rd, 1996, turned in my notice. And then shortly after that, met Jim Alberts out of Green Bay, and we started a LLC partnership effective in 1998, and we had that going through 2019, and then in 2019 we split that up, and I started Heling and Associates here. Basically kept my client base, he kept his, and we kind of went our separate ways that way, and been going ever since. Interesting timing, 2019, because then we did that and went right into COVID right away, which had its own set of fun issues and everything that went along with it. And coming out now here on the backside of COVID, and in a situation where we've had some employee turnover, to put it mildly, but at the same time, changing employees and also changing how we operate a little bit as well too, with people being in the office versus remote and hybrid and those sorts of things, and trying to acclimate that way, like a lot of businesses are these days.
So as you look back especially over the 25 years that in fact, I guess 2023 would have been 25 years from the time you started Heling and Associates. What's the biggest change you saw in terms of the work an accounting firm does?
Well, it's changed, and from a compliance standpoint, compared to 25 years ago, it's the amount of work that's gone onto accountants has increased exponentially. The biggest one of the biggest changes that happened that increased that and really expanded our compliance requirements goes back about 10 years ago when the Affordable Care Act came into place. And I've had people look at that, originally, and they would say, well, that's health insurance. What does that have to do with accounting? Well, it has everything to do with accounting because it's based on your income. Who determines the income? Well, that's where the accountant comes into play. And now it's gotten to the point where we actually, on the front end, work with people from a planning standpoint to make sure that they're going to be compliant with Affordable Care Act, make sure that they're going to stay under those income thresholds so that they can get their credits. Otherwise, they can end up having to pay, the full premium with their tax returns. And we've had those situations come up, over the past years. So it's gotten to be a niche from a tax planning standpoint, just in that one area, for instance. And I remember when the ACA came out, there were people saying, well, it's never going to stick, they're going to get rid of it in 2 years. I said, if this thing lasts more than 2 years, you're never going to get rid of it because it's going to become so ingrained into our culture. It's going to be just like Social Security. And that's kind of what's happened at this point. And, just to give you an idea, and some of your score people probably fall into this category, it's kind of changed the work landscape as well, because if you think about it in the past, a person had to work up until age 65 or figure out how they're going to cover that health insurance gap between the early retirement and when they can go on Medicare. Now with the Affordable Care Act, we've got people retiring at 55, 57, 62, and they've got 7-figure net worths, but everything with the Affordable Care Act is based on income, not assets. So if you manage your assets properly, you can set yourself up that you can show a very low income, even though you've got a 7-figure net worth. You can show a very low income, get on Affordable Care Act, literally pay $1 a month for insurance, and retire early. Whereas in the past, you'd probably have to stay working until 65. So it's changed the workforce in quite a bit from that standpoint.
As you look back over that 25 years, it seems to me, maybe I'm completely wrong about this, not really haven't even become a citizen until 2011, but it feels like the amount of regulation that's happening and new rules that are happening has changed pretty dramatically. Is that the case as an accountant? Is that what you see?
It has. It's been exponential change. I mean, there's some of the basics that are still out there, but there's been so much layering of these regulations, especially from a business standpoint, as well as the individual standpoint. But excuse me, on the business standpoint, there's been so much more regulation piled on as well. And even on the small businesses, and one thing we'll talk about in a little bit is another regulation that's coming on the small businesses. We'll talk about that later on in the show. But you can drive yourself nuts trying to keep up with the compliance requirements with some of this stuff, if you don't get good outside help.
Okay. You talked initially about some of the turnover you've been going through and experience, but we'll cover that more in the second segment. But how else did the pandemic impact you as a business, both when it first started and then just the transition in the industry in general? Because I believe there was a lot of retirements, for example. So what was your experience with the pandemic?
Well, like a lot of businesses, the first thing we had to figure out was how we were going to operate. We were in a situation where we were considered essential. And I think, in hindsight, that might have been an understatement. That should be with capital letters, probably. We did have some people working remotely that would, you think back to 2020 when everything was shutting down. We had a couple of people coming into the office regularly. I came into the office regularly. We had others that were working remotely, kind of coming back and forth as they needed to. One thing that happened is, if you think back, typically we'd have our April 15th deadline, and then after that there'd be a little bit of a lull, and we'd have our extensions that were due October 15th for individuals. That particular year, you had until July 15th. Okay, that just extended our busy season 3 extra months, and then the extensions were due. And then at the same time, they came out with all of these programs for individuals and small businesses. You had things like the PPP loans coming out. We had to educate ourselves in a hurry on those. You had the employee retention credits coming out. We had to educate ourselves on those. And then as they went along, they changed the rules on these things multiple times. They came out with another round of PPP. They changed the rules on who was eligible for employee retention credit. First, you couldn't take that and PPP. Well, then you could. Then they had another round. And so these things were changing on a monthly, sometimes weekly basis. I mean, they were literally making up the rules as they went along. So keeping up with that was just a nightmare. So literally, we've not had a true downtime since 2019 in the last 4 years.
Okay, we're at the right time for a break. And when we come back, we're going to talk a little bit more about that impact and what it's meant for Kurt and his organization and the changes that have happened in his organization recently. You're listening to Biz Talk with Score and WHBI, and we'll be right back after this break.
Welcome back to Biz Talk on WHBI Radio. I'm Rick Sense, here with Terry Pinch today. And we're really glad you joined us this morning. And again, Happy New Year. But before continuing our conversation with Kurt Heling from Heling & Associates, our wonderful sponsor, I'd like to just take a minute to talk to you about Fox City Score. Fox City Score serves an 8-county area with offices in Appleton, Oshkosh, and Fond du Lac. We have about 45 volunteer mentors, each an expert in their field, offering entrepreneurs no-cost and confidential mentoring. Those areas of expertise include IT, social media, marketing, cash flow, accounting, strategic planning, workflow, human resources, retail best practices, and many others. In order to register for a no-cost confidential mentoring session and or to learn more about the Fox City SOAR chapter, please visit our website at score.org/Fox Cities. You can learn more about how the SCORE chapter can assist you with starting and growing your business, and you can complete an application for a mentoring session. Simply complete the online form and submit it to SCORE. Within a few days, a SCORE mentor will be contacting you to set up a meeting. Remember, SCORE is no cost and offers experts who can offer you assistance in many different areas. To get started, visit our website at score.org/Fox Cities. To support small business people, Fox City SCORE is always looking for new mentors. If you have experience that you would like to share with others, we'd love to talk to you. We welcome volunteers with experience in all aspects of business. Small business owners need your help, and your experience can make a real difference to their success. Go to score.org/Fox Cities, click on the volunteer button, and fill out the short application, and we'll get back to you to explain more. Thanks again for joining us on Biz Talk, and now back to our program. Kurt, we were talking before the break about how COVID impacted the business. Can you maybe walk us through not just the impact on the business, but the actual business itself, the structure and your organization, and what the impact was there?
So as we went through COVID, we had to deal with all of these programs that were coming out, the PPP, employee retention credits, the extended tax seasons, all of that fun stuff going on. And at the same time, just like a lot of people, we were dealing with COVID itself. I got it. We had other people get it. We had other people get some health issues. And so what ended up happening was, and this isn't just with our firm, but, industry wide, people got burned out, literally. They just got, to the point where they said, why am I doing this? There's gotta be an easier way, and got into other lines of work. So right now, if you look through the accounting industry, there's a severe shortage of CPAs out there, or enrolled agents, or just general accountants, and that was happening for a while just because of less people going into accounting as a major, and then coming out with accounting degrees. And with COVID, what happened was not only did you have that decrease in people coming in, but you had people leaving the industry, leaving a huge gap in there. So what ended up happening in our firm, and it was as we were coming out of COVID, but 2023 was a really strange year for our firm specifically, from an employee standpoint. We had 6 people that were year-round employees, full-time employees. Of those, we have 1 that didn't have any issues throughout the year. We had 1 who was an administrative person, had her first baby, decided to stay in with the baby. Can't blame her for that. I had 1 that was with me for 15 years. She left after this last tax season. She was burned out. I had 1 I had to let go because she just wasn't catching on, and we were having trouble. We were having some client issues, so we ended up letting her go. We had 1 who's still with us, but she's going to be retiring in the upcoming year. Had some health issues and is getting to retirement age. And we had one guy, 25 years old, was a rising star, ended up getting pancreatitis, 25 years old. He died in August. So, every different which way you can imagine of somebody leaving. So we were fortunate enough to be able to bring in some really good, talented, skilled people. Sue Hintz, for instance, was a CPA that I've known for several years. And we had actually talked a couple different times about her joining, and, timing was never quite right. And this year, finally, the timing was right. And she was actually the last one to join. She joined October 15th. Her daughter was working at the same firm with her. She joined us in August. We had another person who had moved to the area a while back from the Madison area, had worked for a firm down there. we were fortunate enough to get her in. She started right after Labor Day, so we were able to get some really good talent in, as well as bring some person over who had been working with us administratively during tax season. We brought her in full time. So, knock on wood, we were able to have these people come in, and from a skill and talent standpoint, we're probably better off than we were before. Now the challenge is bringing these people in from the outside and bringing these skilled individuals in and molding them into a team in the office, and getting them acclimated with the clients, so that they understand the history behind these clients, and it's not just numbers on a sheet of paper to them. And so that's the next challenge we've got at this point, but I guess it's a lot more fun challenge than trying to figure out, okay, who's showing up for work today and who do I have for staff today,
Mm-hmm. Is it something that you anticipate you've kind of hit a sweet spot and you're going to just be able to go there? Or do you think there's other things in the market right now that might impact that development and that team cohesion?
Well, one thing we've all learned out of COVID is that you have to be able to be flexible and adapt on a moment's notice. And so while I think this is a good team, while I'd like to keep this team together for the foreseeable future, you learn that things are fluid and can change very quickly. So even though that we've got a good team in place and want to develop this into a real team, it's a situation where you look at it and go, okay, well, what if? And, always have plan B, C, and D in place if you can, in any eventualities that come up.
Okay, that's a good time for our next break. You're listening to Biz Talk with Score on WHBY, and we'll be right back. Welcome back to Biz Talk with Score. We're talking to Kurt Heling this week of Heling & Associates. And before we get back to Kurt, I want to give you a quick update on some educational opportunities. If you go to our website at score.org/Fox Cities, you'll see a tab up near the top called Workshops and Events. And go on there, and there'll be a tab for upcoming courses. And there's just a few I wanted to mention you should go out and take a look at. The first one is How to Start an Online Store, an E-commerce Business Guide. That's going to be a webinar on January 9th, and you can sign up for that free. The second one I wanted to mention is the 2024 Hottest Business Ideas, Trends, and Markets. And that's on January 18th, and you can go sign up for that as well. There are a number of other events and activities out there. I know there's one coming up on the Corporate Transparency Act that we'll talk about in a few minutes, but there are a number of other ones that you can go and learn a lot of different things about your business. So again, that's score.org/Fox Cities, and click on the Workshops and Events tab. So with that, we're going to turn back to Kurt. And Kurt, in this segment, I want to talk about a few different things, but the first one we want to spend some time on is the employee retention credit. Could you first explain what that is and then what the issues are with it?
Well, I'll explain what it is. You might need to put your 7-second delay on here when I get to talking about the problems that go along with it. The employee retention credit came out during COVID, and it came out with the best intentions. It's a credit that you get based on as the name implies, retaining employees through COVID if you had an economic downturn. And that economic downturn was based on a decrease in revenue, either in 2020 or 2021. There's different criteria for those. I'm not going to go into all the criteria that goes along with this because we don't have that much time on the show, but there's economic downturn, or if your business was shut down, based on government shutdown, or if some other criteria applied, that could also negatively affect the business. And this is the gray area where things started getting really ugly. So when you look at it, revenue decrease, that's relatively easy to quantify on a quarter to quarter, comparing to 2019 where your business was to 2020 or 2021, depending on the quarters. That's a relatively easy thing to quantify. Government shutdown. We know when the government shutdowns happened, starting in March of 2020, and then things started slowly opening up. And then what ended up happening with these employee retention credits is originally you could either take PPP or the employee retention credit, but not both. Then in 2021, late 2021, they opened it up that you could take employee retention credit in addition to PPP, but you had to do a calculation so that you weren't double dipping on the same wages you used in calculating your PPP forgiveness with your employee retention credit. Can you see the problem in the math right there already? So that's problem number one. Then what happened starting in 2022, as this opened up, you started getting companies opening up saying, we will guarantee you $26,000 per employee for every one of your employees that you had on during COVID. And you had all these companies popping up, and every business owner that's listening, if you've never gotten one of these calls, first of all, consider yourself lucky, and secondly, you must be very far under the radar because these calls would come on a daily basis from these companies. And the problem with these companies is they would charge 15, 25, the most I ever heard was 25% of the credit calculated. Here's the fundamental problem, is that are they really working in your best interest when they are calculating these credits, or are they working in their best interest because they're doing it on a commission basis? So what would happen, you would see really the most I ever saw, I saw 7-figure employee retention credits calculated. Problem is it was for a roofing company. How is a roofing company shut down by COVID? They're already socially distancing up on the roof. They're not going in people's houses. It's not as if they're a restaurant where people couldn't come in, or a retailer where people couldn't come in, or a daycare where you're limited on how many kids you could have coming in. They didn't fall into any of those criteria. They didn't have the revenue decrease, and they're getting all this money coming back. That's where the IRS started seeing problems with this program, and they literally stopped processing employee retention credit applications starting in mid-September of 2023 because there was so much, number one, there was so much fraud going on, especially with these companies doing this on a contingent fee basis. And even when people were calculating it and had legitimate claims, they weren't calculating it properly because of the calculations that had to come into play with, which employees qualified, which employees did you use, what payroll are you using for your employee retention credit, what payroll did you use for your PPP loan forgiveness, and making sure that wasn't done. So what they figured out, they found that 80% of the ERC claims filed were either flat out fraudulent or incorrectly prepared. 80%. That's a problem, and that's why they shut it down. So far, they haven't opened it up yet again. They said originally it was going to be January of 2024. Well, we're into January, so we'll see, when that opens up. The filing deadline for 2020 claims is going to be April 15th of 2024 now. For 2021 claims, you have until April 15th of 2025. So we're getting towards the end of this. But even if you put that claim in, there's no guarantee that you're going to have any actual credit come back for months, maybe even a year after the fact. And how closely is the IRS going to scrutinize those employee retention credit claims? These companies that came out with these contingent fee calculations were, as these things go, they were getting clients money that they probably had no right to, Now the IRS is going to try and claw back that money. And these companies that did these calculations are, by the time the audits come around, they're going to be gone. And so what's going to happen is you're going to have companies that have gotten 6 figures, maybe even 7 figures, like the company I told you about. They're going to end up having to pay this back, and the money's already going to have been spent on something else. That's going to be a huge problem. That's going to be a big negative effect going into our economy coming in the next couple of years. And the other thing that's going to go along with that is, where's the liability going to fall? And that's where we have E&O insurance issues, errors and omissions insurance issues as accountants, because of the fact that are we preparing returns that somebody else did the employee retention credit calculation on? We need to review their work in order to see if these claims are actually legitimate or not. Otherwise, we have an E&O issue, even though we didn't do the work on it. IRS is opening things up, and they're actually saying, if you've got a claim in right now and you want to withdraw it, here's the process for it. And they've got a whole process for withdrawing a pending claim. They've actually got a process now where if you got the money and had a claim paid out, but you want to pay it back, you can pay back the portion that you got. And if the company that did it kept 15%, you only have to pay back the 85% you actually got. But here's the catch. You have to tell them who did your work. So they want to find out who these scam companies are, and they're going to start going after them. And they're kind of going up the ladder a little bit that way. But this is one of those programs where it came out with the best intentions and got totally convoluted into something it never was supposed to be. And the IRS being as far behind as they weren't able to catch up on things. You hear about these stories about IRS getting 88,000 new agents. They don't have 8,000 new agents at this point. They're still in the very infancy of that. They don't have the manpower to be policing this on top of everything else that they're supposed to be doing. And so that's another reason why they put the kibosh on it when they did. So it's turned into a huge mess, and there's going to be companies out there when and if these things start getting audited, and they're going to come after them because there's huge dollars amount out there. There's going to be companies that end up having to figure out how to pay back hundreds of thousands of dollars in credits and not understand why.
So it's one of those examples where you want a relationship with an accountant that's worked over time, and they should be reviewing everything related to your tax and business returns so that you make sure it's right. And if it's too good to be true, it's often too good to be true.
Well, and that's really what happened. I mean, there's legitimate claims out there. Like I said, people that were retailers, restaurants, daycares, for instance, that have legitimate claims out there. And I'm just using a couple industries, but there's also industries out there where we looked at and said, you're not going to qualify for this. And then they went to one of these other places and said, well, they said we qualify, so we went with them. Okay, now what do? They've already gotten the money back and they really didn't qualify. How do that's where the accountants put into a rock and a hard place then.
So is that one where you're going to have to get some legal advice and figure out how you work through it?
Exactly, and that's what we're working with our E&O insurance agents on. And there's guidance from the IRS, there's guidance from the American Institute of CPAs, there's guidance from our E&O insurance on what we need to do. Literally, we have to go through and basically recalculate the whole thing. And in some cases, we'll have to break the news to the client saying, guess what? You got to pay this money back.
Okay. So another example where government had to react quickly. They did a lot of good things during the pandemic, but there was always going to be some mistakes. But this turns out to be a big one that's going to fall on a combination of small business and accountants. So hopefully we can work through it and get this cleared up for people. Because There was a positive intent. It just was poorly executed.
It was one of those things with, the good intentions, but we know where it leads.
Yep. All right. We're going turn to another government program. I expect very few people have heard about this, but they should have. It's called high level, the Corporate Transparency Act. I think it's FinCEN is the initials for it. Can you talk about that, Kurt?
Well, yeah, FinCEN isn't the initials for it, but you're right. The Corporate Transparency Act, this is something that's coming into play now in 2024. And this is every LLC, every corporation, throughout the country. So this is a nationwide thing. It has to go onto the FinCEN website. And FinCEN stands for the Financial Crimes Enforcement Network. So these are the guys with the guns. And when you think about that, Financial Crimes Enforcement Network, why do they want you doing this? Well, what they need to do is, in corporate transparency, what they need to do is find out who actually owns these LLCs and corporations, who are what they call the beneficial owners. And that's a term you'll see a lot with respect to this, is beneficial ownership interest. Who actually owns them, who's actually getting the benefit from these. And so you have to go onto the FinCEN website, register, and fill out their forms. And I haven't had a chance to do this with businesses that I'm associated with yet, but it's one of those things I'm planning on doing very soon. If you're in business already, you have until the end of December 2024 to register. If you don't, the fine is $500 per day until you do it. So they're serious about this. If you're a new business starting in 2024 and after, you've got 90 days from the time you register the business to get it done. So you want to get this done, and then you have to update it. So if the business moves, if there's a change in beneficial owners, anything like that, you need to go back on and update it. And I think that's where a lot of these things are going to fall through the cracks too, because that might be 2, 5, 10 years down the line. You haven't heard a lot about this yet. You will. And I think what's going to happen, just like the employee retention credits, you're going to start getting phone calls and emails. We'll help you fill this out. We'll help you complete this Corporate Transparency Act. Here's the problem, is it's a really good way to give away all your private information to somebody you don't know, because included with all this information is your personal information. So there's personal information that goes into this website that if you're giving this away to somebody over the phone to help you complete this, you've just given away all your personal information. No reason to do that. Now, here's the other rub. I can tell you about it as an accountant. According to our E&O insurance, we're not supposed to do it for people. It's either supposed to be the companies themselves, their attorneys. If we do it, we're crossing the line going from accounting into practicing law, is the way it's been explained to us. Now that's interesting because every seminar that I've had this fall has started out talking about Corporate Transparency Act. I talk about it to attorneys, they've never heard of it. And I said, well, guess what? You're going to hear about it because I'm sending all my clients to you and they're going to bang your door down. It's going to be the easiest money you make, but you better get yourself caught up on it and up to speed.
So as that change gets implemented, there are some exceptions, but for the most part, most businesses have to register. And for people listening, if they've got a business, they have till the end of the year then to register.
Correct. And it's one of those things that I've brought this up to people and they say, well, we're just a small business. This doesn't apply to us. And that's actually the opposite of what's true, because it's the small businesses they're looking for. The big companies, the major corporations, the public companies, they've already got all the ownership information there. They've already got all the board of directors information. That's public record. It's the small businesses that they're looking for. And where this comes from, to a certain degree, not to get too political, but there's a certain president who has a certain son who has gotten himself into some trouble with some LLCs that he had that were in the country and out of the country, in China and, the Ukraine and places like that. And that's kind of one of the impetuses behind this rule is, you have a lot of this sort of thing going on throughout the country. You have LLCs that are owned by other LLCs that are owned by other LLCs, and they're trying to get to the end of the line to who actually owns these LLCs. And so with respect to that, it really does apply to the small business owners.
All right. And on that note, we're at the perfect spot for our last break. You're listening to Biz Talk with Score and WHBY, and we'll be right back. I would like to thank our sponsors who bring Biz Talk to you each weekend. We couldn't present Biz Talk without their generous support. Thank you to Kurt and Heling & Associates. Heling & Associates help small businesses and individuals not just prepare tax returns, but plan for taxes, helping minimize taxes for this year and beyond. Heling & Associates. Personal connection, positive results. Thank you, Abbey Bank, for being a sponsor. At Abbey Bank, we make banking about you because your dreams and goals deserve personalized attention and care. Whether you are navigating your personal finances, growing your agricultural endeavors, or managing your business, Abbey Bank is here to support you every step of the way. Join us today and experience banking the way it should be. Abbey Bank is a proud member of the FDIC. And a special thank you to the Business News for promoting our program in the biweekly business newspaper serving Northeast Wisconsin. If you aren't already subscribing to the Business News, you should. The paper is delivered biweekly and contains relevant and useful information about the business community in Northeast Wisconsin. In fact, Kurt, could you let people know how they can contact you?
Yeah, the firm name Heling & Associates CPAs LLC. You can look us up on the web. Website, Heling and Associates, all spelled out, .com. And you can give us a call. We're in the town of Fox Crossing outside of Neenah, 920-886-2241. We do free initial appointments, so sit down and talk to anybody that's looking at starting a business, give you some ideas, help you get pointed in the right direction.
Okay. As you come into 2024 and look at all the changes you've gone through in your business over the last year, what are you looking for in the future? What are you seeing out there?
Well, I'm hoping for a little consistency and stability, which I think we're going to have going forward. So, looking forward to that. But but at the same time, the industry is going to be changing. Tax rules are always going to be changing. Things that affect our industry are going to be changing. They're changing faster than ever, partly with technology, partly with economic situations. So that's one of those things that I see that's going to be nonstop, and it's just going to be a matter of incorporating those changes into the rules that are out there already and being able to guide and guide clients properly, give them good advice going forward, not just from entering in numbers and here's your tax return type thing, but giving some real planning advice, on an annual basis and on a long-term basis for clients as well.
One of the things that I always tell people I'm mentoring is that one absolute requirement should be get an accountant if you're going to have a business, because it's too complex now. You can do the bookkeeping maybe, but you really need an accountant, especially once you start up the first year, but then ongoing, to look at your books and give you some ideas of what issues you should watch for. So I hope you got that message today for people listening about some of the complexity out there. But as Kurt says, there's no sign out there that is going to slow down any. So make sure you deal with that, work with your accountant, and get one. And some people don't necessarily like to pay that fee, but it's one expense you shouldn't avoid. So, Kurt, thank you again for being on the show. It's always great to talk to you.
It was a pleasure.
I hope I know the tax season isn't quite kicked off yet, but probably in about 3 weeks, you're going to start seeing things flow in. So good luck to you.
Exactly. Appreciate it.
Okay.
Thank you again for your sponsorship too, Kurt. We really appreciate it here at SCORE.
Not a problem. Always a pleasure working with you guys.
Okay. All right. With that, we're ready to wrap up the show for this week. You've been listening to Biz Talk with Score. If you want to listen to this show again or some of our previous shows with Kurt and others, go to our website at biztalkwithscore.com, and you'll find shows since about 2018 out there on the website, and you can take a look again and hear what's going on. So once again, thank you, everybody. Hope you had a great holiday season, and we will talk to you again next week. Thank you.